Welcome back to Biff Mini Bites video series, where we like to take 5 minutes to discuss each of the most important CFP exam topics. I'm Mike Long from the Boston Institute of Finance, and in this mini bite we want to take a look at a concept called step up in basis at death. This is an important estate planning / income tax topic that we encounter in the field in real life, but also you will encounter questions on this for the CFP exam. So let's break this down a little bit. There are certain assets when held by a decedent at death that are eligible for a step up in basis to the heir. And this can be a real advantage. There's different categories that are eligible for this: joint property with a spouse, joint property with a non-spouse, also assets transferred by the last will and testament, assets held in a qualified revocable trust, perhaps a bank account or securities account with a POD or TOD attached to it, and community property. They're all eligible for step up in basis at death of the owner. There also are assets that are not eligible for a step up in basis. The most common we encounter with clients tend to be the income in respect of decedent IRD assets. And these are the common things held: IRAs, qualified plan accounts such as a defined contribution pension plan, 401k account, and annuities are considered income in respect of decedent assets. Also, gifts that were made before death are not eligible for a step up in basis of the donor. And irrevocable trusts of decedents that are held, those assets are not eligible for a step up in basis. So let's look at this in an example. Let's just run some numbers through this so you can see the real impact that a step up can make. We're going to take $100,000, and this has been invested by the now decedent in mutual funds. And over the years, those mutual funds have appreciated and grown to be valued at $500,000 at the time of death of the owner. And we need to look at the tax consequences to the person receiving this after death. What are the tax consequences if they choose to liquidate those holdings? So the first wrapper we'll put around the mutual fund is just a regular brokerage account. No big deal, regular brokerage account. Lots of clients have them. And the client has made $100,000 in, of course, after-tax contributions to the account. It's grown to $500,000 at death. At death, then, to the heir, to the receiver of this property, their basis now becomes $500,000 in those mutual funds. It's stepped up to the fair market value at death. So if that heir, maybe it's a child of the decedent that wants to start a business and they need a big lump sum of cash, they want to liquidate it all at once, that could be done at $500,000 with zero taxes due, because they sold it at $500,000. The basis was stepped up at the death of the owner to $500,000. Pretty powerful tax in that regard. Secondly, let's place those mutual funds in a traditional IRA. Lots of clients have these as well, right? So we have the same $100,000, but a nuance in this is that the $100,000 contributions to the IRA were all non-deductible. So the client has basis in this IRA, 100% non-deductible contributions. Same $500,000 at death. Here, the basis to the heir is the carryover of the $100,000 of the original owner. There is no step up, but the second owner has a $100,000 basis. We liquidate at $500,000, so $400,000 would be taxable as ordinary income. Ouch! Ordinary income rates if we liquidated that. The last wrapper I want to put around this is that this $100,000 in mutual funds was held in a 401k account, also very common. It's also an IRD asset. We have $100,000 pre-tax contributions over the years into this account. It's worth $500,000 at death. There is no step up in basis. There is no basis whatsoever because it was all pre-tax money. So if that heir chose to liquidate this account at $500,000, $500,000 is taxable also at ordinary income rates. So be aware of this. Ask the questions. Where is it held? What kind of wrapper does it have around it? What kind of basis are we looking at? Very important to help your clients. Very important for the CFP exam. Well, thanks for listening. The full mini bite video series and a lot of other great study resources are including our very popular BIF Bites podcast can be found at biffbites.com. We hope you use them to the fullest and enjoy them. And I always like to say, study on, my friends.